Hello and welcome to the Strategy of the Week tutorial for November 1st, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest, and this week we will present a very important topic called Discover the Power of RMA. RMA is a VectorVest proprietary indicator, and it's a technical analysis indicator, so it's enclosed in our Pro Trader add-on module. For those of you who use real-time, of course, that add-on is given to you free of charge. Anybody who may need to consider purchasing Pro Trader can see the link provided in tonight's VectorVest Views for a very special offer. With that out of the way, let's jump right into the presentation. The first thing to understand about RMAs is that it's analyzing two moving averages. And so let's first get back to the basics and understand, again, the meaning of a simple moving average. Well, the definition from Investopedia states that a simple or arithmetic moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by that number of time periods. So in the case of a 10-period simple moving average, and assuming we're looking at end-of-day price bars, you'd be looking at the closing price for each day, summing up that price for the last 10 days, and dividing by 10. And of course, that would plot the current day's moving average data point. Now the word moving is also important. For the next data point to be plotted, when you move to the close of business for the next trading day, that new price data comes into that 10-day window and the oldest price data falls out. So you resum the 10 data points, including the new day, and then divide by 10 again, and that plots the most recent data point. And this can be done not just end of day, but also minutes or any other spectrum of data points. With that knowledge in tow, let's move on to the next important subject. When analyzing moving averages, traditionally you're looking for market entries and exits by analyzing for crossovers. It says here a short-term moving average uses a relatively small number of price bars, in other words, say a 5 or a 10, and this reacts very quickly to new price changes. Longer-term moving averages use a relatively large number of price bars, for example 30, 50, 200, and react slowly to new price changes. And in most cases, you're looking for the short-term moving average to be crossing through the longer-term moving average as an indication of directional change and momentum in that direction. Relative moving average takes an interesting spin or a novel approach on moving averages. We're still going to use a combination of the two moving averages, but in this case we're going to create a ratio of the fast moving average to the slow. So the calculation is simple. You take the data point for the fastest moving average and divide it by the current data point for the slow moving average. And this is going to yield a number of interesting scenarios that we can capitalize on. So let's discuss RMA levels just for a moment. And I'm going to start right in the middle because this is the easiest one to explain straight away. If an RMA value is exactly 1, it means that the fast moving average and the slow moving average are equivalent. In other words, if you're analyzing price in, say, a 10-day moving average, as price can really be a moving average to its own right, it would mean that the price on the current day's close, in the case of closing data, is equivalent to, say, the 10-period simple moving average in value. And that's really the crossover that traditionally determines a solid entry or exit point in a stock. But if we're creating a ratio, we can actually not just look for crossovers of the traditional approach, we can actually look for overbought and oversold conditions as well, and everything in between. So when the RMA value exceeds 1, this is when the fast moving average is above the slow, indicating upward momentum to the stock. But here's the catch. We can look for the greatest disparity of that, or a case where a stock can be extremely overbought. Out of all the stocks in the Canadian database, we are able to find the stock that has the highest price compared to its 50-day average, of course, that stock is likely to regress back towards the mean, particularly at market tops. And in cases where we search through the database and find situations where price is well below, say, a 50-day moving average, those are stocks that are tremendously oversold and would regress towards the mean, particularly after a market bottom. So RMAs can be used for identifying great stocks to buy at market bottoms, great stocks to sell short, for example, at market tops, and even high momentum stocks as the market is well into a rally or a retreat. So let's jump right in the program and take a look. So here we are at VectorVest, and the first thing I want to do is set up the market timing aspect. You always want to be thinking about market timing when you're putting together an RMA scan or search. So let's quickly go up to the Graphs tab, and here we are. I've got us in a market timing graph. Most people are more accustomed to buying stocks long, so I'm going to start with that situation, and then towards the end get you prepared should the market continue to turn over as it's been doing in the last couple of days. We can clearly note that the low marker for the last 1 year in the Canadian market came on 6/24. This was a market bottom. So I'm just going to zoom around that data, and here we can see price was coming down, 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 hit a bottom, and then started to rise up off that bottom. Now if I stretch this back just a bit, I want to show you something very important here. A couple of things. I'm going to leave on the MTI and the RT. I'm going to take off the buy-sell ratio just for a bit. As the market was coming down and continuing to hit lower lows, our market timing indicator over the same period of time was actually working its way a slight bit higher, and it was below a value of 0.6. And these are areas where we are looking for market bottoms. You can see when the MTI gets down in here, the composite wants to shoot up in price. And so it's like stretching a rubber band. The market has become oversold. Investors realize that, and they go bargain hunting and start buying stocks. Of course, we can see it happen a couple of times just within this few month window that we're looking at right now. We can see an even better case of the divergence with relative timing, and this is the short-term price direction of the composite. You can see clearly here the higher lows that are being set in place. Now it's very difficult to have known on the 24th itself that you're absolutely at that market bottom, but with the indicators at those lower levels where we're searching for a bottom, we at least know to be on the lookout. So what do we look out for? Well, a green light in the price column of the color guard wouldn't be a bad situation, right? So the first time that that happens, if I switch it from confirm calls to green light buyer, is going to occur right here on 7/8 of 2013. And you can see that we had a green light for a number of days in a row there. So one of your best times to run an RMA scan looking for a stock who's trading well below its 50-day moving average, for example, would be at a market bottom after you're certain that the market has likely bottomed, hence the green light, and running the type of scan then. So let's do that. We're going to run an RMA on July the 8th. To do that, I'm going to go right into Unisearch. And in Unisearch, if you have access to the ProTrader module, you'll have a ProTrader folder here. If you do not see one of those, feel free to take advantage of the link that's in the views or give us a call here at the office and we'll get you set up. If I click on ProTrader and scroll down, there are a couple of RMAs included. If I click on the top one here, price 1 and 50-day, it'll pull up the scan. So I'm just going to push the panel off for just a moment. I'm going to move us back to that date of July the 8th before anyone's allowed to forget where we started. And the first line contains the RMA. It says here we're looking at a 1 and a 50. I'm going to click in the value box. A lot of things can be done with RMAs. We can look at simples, exponentials, or weighteds. Simple works just fine. I'm going to leave it right there. Then you can determine the short-term and the long-term average combination. We're going to leave it right at 1 in 50. You can simply display the value and it'll spit out that RMA. So if they're equivalent, you'd have an RMA of 1 in that box, etc. If I click the drop-down arrow here, you can specify that it has to be equal to a certain number. It could be equal to 1, for example, for a crossover, or 1.2 for the short-term moving average to be, say, 20% above the longer-term moving average. We could say that it's not equal to a certain value. We could say it's greater than 1. If we want to find situations where price is trading above a 50-day average, this is how you do it. Just simply say greater than. We can look for nearing crossovers. We can simply display the values just as some ancillary data to examine. Most of the time you're going to sort. Sorting yields potentially the most powerful results with RMAs. Again, we're looking for the greatest disparity now between the 1 and the 50-day. At market bottoms, we want to run it ascending. This will be where the 1-day is furthest below the 50. So if I click on OK here, we've now made the necessary change for a market bottom. One additional piece of criteria you may consider when looking for stocks whose 1 is well below the 50 is try to put a criterion into your search that ensures that you're dealing with a high quality stock. For example, if I come into the parameter box, go to stocks, capital appreciation, RV for relative value, I can then say that that has to be greater than or equal to custom value of 1.4 on a scale of 0 to 2, meaning the upside potential for these companies is rated excellent. So let's go ahead and run the scan. And here we have our result. One thing to note is it is going to spit out the RMA value. And here we can see that the 1 at the top is at the top because it has the lowest RMA value on the scale. So this is the stock again that has price being the furthest below the 50-day average. Just to take a quick peek at that, you can graph it, of course. I can right click on the stock, view the stock graph. But let's move it back here and take a look at the day that we ran the search. And of course we ran it on July the 8th. If I pull my graph panel out, let's take a quick peek at the 50-day average on that day. And so here you can see the gap between price and that 50-day average. It's just like stretching a rubber band. The further price moves away from that average, the more tendency it'll have to snap back towards it. We can see that it not only happened here on the day of the search, look what happened here, and here, and here. Each time price pulls far away from that average, it has a propensity to regress to the mean. It's called regression to the mean. Now at a market bottom, when you couple the power of the market bottoming with a stock bottoming out, it's an extremely powerful combination. Let's take a quick peek. The best way to analyze performance just on a quick basis is with quick test. So let's see how these top 10 stocks with the most oversold conditions in the database that have tremendous upside potential, let's see how they performed over the next several weeks. If we click on quick test at the top, we'll do the top 10. And all the way up to 11.1, they're up 24% or 75% a year. Now we may not have held on to them quite that long. If I come up to the top and move back, you know, we did have a confirmed down call, short-lived, but did in fact have one on August the 7th. So if I just click that date and rerun the test, these stocks are up almost 16% 1 month later. That's a almost 200% a year annualized rate of return. So they're going to snap back fast and strong. This type of scan works beautifully well at market bottoms. We can see 8 of the 10 stocks went up in price, and we had some really big winners in here at the top of the list. Now if you're uncomfortable with the price points, you'd simply come into the search and adjust the price and even the average volume criteria to your liking until you get a scan that you're happy with. Now if I go back to the timing graph, once the market matures, and let's say we move back into more of a confirmed call situation, and we'll just use the latest one. Once you get 4 to 6 weeks into a rally and you're dealing with a high momentum mature market, you got to switch your mentality. If you run an RMA scan for oversold at this stage, the stocks are typically low for a reason at that time. There's something that's wrong, and there's no strong investor sentiment at that point. Here, you got to switch your mentality, and the right way to go might be to reverse the logic, actually, and that is to look for stocks who are really high momentum and switch from looking at the oversold to the overbought and just ride them out. Or even the crossover, whichever strikes a better chord with your reason or rationale and logic. Let's just take a look at buying the high momentum stocks as of this latest confirmed up call as a quick study. So this date again here is September the 11th. If we go back into Unisearch, switch our date accordingly, and switch our RMA accordingly. Again, we're going to go descending here for the high flyers. Let's run our test again, and look at that, 84 and 83% up here at the top. Well, of course, that's two different shares of Air Canada, so that would explain that. But this is the kind of conceptual understanding I want you to have. At market bottoms, you want to find great stocks that have been just killed in price. RMA is the easiest way to find those. As the market begins to mature, you move back more towards your traditional moving average crossover to high momentum trading. And we can also look for good potential candidates to take advantage of on the short side should we hit a treacherous down market. So let's just take a quick peek at that. If I go back to the timing graph again and just slide us back here. Okay, great. Here's the downdraft, the final downdraft that led into that June low. And as we see price beginning to break down here off this nice rally, on 531 we really began to see some significant downside as price has already leveled out. This would be an opportune time to start thinking about running RMAs to the short side. Again, looking for the overbought conditions. So let's just go quickly back to Unisearch. We can leave it sorted descending. We'll move back to the 31st of May. One thing I'd consider here if I'm going to sell something short is getting stocks that are greater than $1 in value for sure. So let's push that up to 10. And so next we'd want to change the RV value to something less than 1. Would we not? Because we don't want to short high quality stocks. We want to short stocks that have poor quality fundamentals. So if we change the value here, say to a custom value of 0.4, we also have to change the operator, of course. Run the search. It doesn't find all that many stocks, but look at the fundamentals on the stocks here that we're working with. The RVs are extraordinarily low. They don't have a lot of safety, and they're rising in price in a market that's getting ready to turn over and fall. If we quick test the top 10, of course it outperformed the market to the downside. Now, we may have gotten a little too aggressive with the RV value here. We could back that off a bit, go to a custom value of 0.6, and that would allow the RMA to do even more work for you. Now, we may not do quite as well because these stocks, some of them, are not quite as poor fundamentally. But let's take a quick peek at the results here. Still did quite well, 6.44, 10 winners. So folks, this is the power of RMA. RMA has many, many uses. You can look for overbought stocks at market tops. May be appropriate in the upcoming market. Time will tell. We can look for oversold stocks at market bottoms, and we can even look for high momentum situations once rallies mature from market bottoms, and everything in between. So with that, I want to thank you for tuning in to this week's Canadian Strategy of the Week on Discover the Power of RMA. We'll see you again next week with another exciting presentation. Have a great weekend.